All right, everybody, this is John, and tonight we're going to be talking about squeezes. What are they? Why are they important? Why do we want to look for them on a chart? So squeeze is really there's the OG squeeze, which is the red dots, and this is something I started using, gosh, over 15 years ago now, and it's been a core part of my trading. And so really what is it? And in a nutshell, it's you can see there's waves of momentum here during this uptrend. And in a situation like this, where the moving averages are all stacked positive, and basically the 8 EMAs on top of the 21, which is on top of the 34, on top of the 55, on top of the 89, on top of the 200, and you get a squeeze, the odds are something like 82% that this is consolidation, and then the odds are 82% that in this situation that this consolidation is going to release energy, and it's going to release it to the upside in the direction of the trend. And so you can see here we've got, we got here, and then for, all of most of September, we've just been trading sideways, doing nothing, doing nothing, doing nothing. And then you can see we start to get those red dot squeezes. And typically you need like 4 or 5 of them. But when you start to see the squeezes forming, I start buying any pullbacks to that 21 EMA. And it hasn't even fired yet. But what you're looking for then is when it does fire, which is kind of that first green dot right here, you're going to get, you're going to look for 2 times the ATR. So ATR is the average true range, which typically means, the average range that it has in a day. So for LGND, it's basically $5, meaning that its typical range up and down from the highs to the lows is typically $5. And what you're looking for on a squeeze is when that forms is that you're looking for essentially a minimum target of 2 times that. Now it can go more than that, but you can see from the 21 EMA, which is just over 165. 2 times that would take it to 175. So we're kind of already up there. And when you see a situation like this, you can also use the Keltner channels. If you zoom in on here, essentially 2 ATR is that second Keltner channel right here. And then if the squeeze is really strong, it can push it up to 3 ATR. All right, so in a situation like this, if you're just, if you didn't get into this one, you look at this and say, okay, maybe you missed it, but maybe you get another chance at the 21 EMA. Because if it's still red dots here, this thing, you can see it got to 2 ATR here, drifted back to the 21 EMA, but then typically what happens when the squeeze fires, instead of drifting back, you actually kind of sometimes ride the 2 and sometimes 3 ATR up higher. Okay, so that's kind of how it works. Now, if we look at SPY, it hasn't had a good squeeze on the daily chart recently because when it's going like straight up like this, it's going to be pretty powerful, and it doesn't even pause enough to get any good squeezes. However, that being said, I always like to look, well, in addition to the smaller time frames, is looking at some of the larger time frames here. And of course, we've had a lot of unusual activity going on in the markets here. So you get something like this, it creates a lot of volatility. It takes a little while for the weekly chart to kind of build up another squeeze here. And you can see the overall ideas here. When you get a squeeze, and it fires, great. You typically get 8 to 10 bars of movement, and then there's a pullback, and then you get another squeeze and it fires, and so on and so on. So we've had some kind of crazy moves in 2024 and 2025, and then seeing where this kind of all nets out. So if we come back here and we look at some of the Mag 7 stocks, from a weekly perspective, you had a pretty solid squeeze that set up here, and when it released, we've just been going up and up and up. And then if we drill down here and we look at, say, a lot of times people forget that there are 2-day and 3-day charts, but if we look at, like, say, the 2-day chart, and this is you got a really great squeeze that's setting up here. And I love these 2-day charts because sometimes it's not big enough that it's got to be a whole week. And sometimes the daily bar, there's just some different stuff going on. But these 2 and 3-day charts are kind of hidden gems in terms of consolidation. And you can see that we've had this consolidation here for most of September. So any pullbacks to the 21 EMA are buyable in this situation. And you're just waiting to see, like, okay, is this thing going to break out? And it certainly did there. Or if we look at, say, Tesla, which recently had a great breakout. Same thing. You had this 2-day squeeze, which is kind of hidden from a lot of people. You're sitting there, you're buying the 21, you're buying the 21, you're buying the 21, and then when it does finally break out, you get the payoff. Now, here's the thing with this. When you see a squeeze, the one thing you know is that the odds of a greater than expected move are setting up. Okay, it's like, wow, this thing, set it as, its usual. So a greater than expected move is essentially something that I would say is greater than both the daily ATR and then over the course of a week, greater than the weekly ATR. So for Tesla, when it had this big move from 343 to 450, over the course of a very short amount of time, you can see that it was almost did like its whole monthly ATR in the course of 5 days. So that's what we're talking about. A greater than expected move basically could take like a weekly or a monthly average true range and consolidate it down into the squeeze signal. So that's what this is that you get the squeeze signal as the congestion, and then instead of a move that would normally take a month, it's brought forward into the future when the energy is released, and then it can happen in like 5 to 8 trading days. So that's kind of the beauty of this. And if you're trading stock, it's easier because you just buy pullbacks. You've got your stop in place. With options, and easier to an extent that if you're not as familiar with options. So a mistake I see a lot of people make with options, well, a couple of mistakes, but here's 2 of the main ones. So main one is like, oh my God, Tesla's going, and then they buy some out of the money calls or at the money calls right here as it's spiking, and maybe the options that they buy expire 5 days later. So not only did they buy on this kind of break or retest of resistance, they also did it short dated, and so they as they try to hold through the inevitable pullback, their option expires worthless. And so what I found is that the best way for this kind of stuff, and whether it's Tesla or LGND or whatever it is that you see there's a squeeze. All right, we know that the odds of it releasing a greater than exponential move are high, but we don't know is when exactly it's going to happen. It's not like, oh, there's going to be 6 red dots and then we're going to rally for 8 days in a row. Sometimes it'll be 5 red dots and it goes, and then sometimes it's 20 red dots and it goes. We don't know exactly when it's going to be. Okay, so the important thing here, again, if you have the stock, you can just hold on to it. But if you've got an option, what you want to do is, especially if it's an option, is the best entries are going to be any pullbacks into these moving average clusters. I typically use the 21 EMA as kind of that zone of support, and so I'll add to it on the 21 EMA. Oh, it's pulling back again, add to it on the 21 EMA, and then if you got the stock right, it doesn't expire. But if you're buying options, man, give yourself the gift of time. So if it's right here, and this is like in August, I would much rather say, all right, let's buy maybe a far out of the money call debit spread or some calls that are 30 plus days out, okay? And if you can go to 60 plus days out, that's even better. And I know sometimes on a stock like Tesla, those options can be pretty pricey, but that's the beauty of debit spreads. But the more important thing here is time, okay? It's just time, so you can sit through that, all right? All right, excellent. Hope that all helps. I am also a fan of the squeeze intraday. This is SPX on a 5-minute chart, and you can see we had a nice squeeze that was developing today, and then when it fired long, we got kind of a nice drift up on the SPX into the close. In addition to this, I'm a huge fan of these tick timing tools, and they're used to kind of trade the nuances of the S&Ps, of the S&P futures, of 0DTE, XPX, or SPY options. And I'm going to be doing a kind of an overview on this Thursday night at 7 o'clock. If there's a link in there, I think there'll probably be a link in there if you want to check that out. All right, you guys and gals, have a great trading day, and welcome to the first day of the last trading quarter of 2025.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.